Club. Welcome to the market update. Today is August 10th, 2018, Friday. Market just closed, so actually I'm recording this post the market. Hope you guys had a good week trading this week. Time flies here. We're almost, middle of summer or end of summer, almost. Actually, no, we got August here. We got actually a month and a half, 2 months to go here, but it's getting there, and the market is actually doing very, very well. S&P 500 is near all-time highs. Obviously, Russell 2000 and the Nasdaq, they've already made a new all-time high, and it's way to continue to cultivate primary term uptrend, right? And S&P obviously has not yet created a new all-time high yet, but we're there. Obviously, we've been talking about Dow Jones and some of the sectors like financials and utilities, and they've been lagging. But something we've been talking about, if you've been following my market update videos, that if you're not already in the Nasdaq or the Russell 2000 or the Spider, why not focus on the indices and sectors that are lagging, right? So obviously, I'm still, I've been long on almost every single of these indices. I've been buying the dips since the lows here. I'm holding almost everything except Russell 2000. I did close out some up here just to lock in some of that gain, but I'm holding actually full on the Spider that I've been buying the dips here and here and here, and I did a little bit more somewhere here. I forgot where. But I'm holding everything because I think, it is very much doable. They will get to 300 before the year ends. If everything looks really, really good, maybe even through 310 is also possible. But those are my targets there, 300, 320, 340, maybe going into next year. But, today let's keep things simple and concise. Spider, IWM, and XLF. We'll call it a day. After that, let's start with the Spider here. Spider pulling back a little bit near the highs here. We're seeing the gap down here. You can see that, obviously as far as like a, candle structure is concerned, it's very similar looking as to something happened here. You guys remember what happened here on that day. Here, let's go back. You can see right here. If we zoom in here, you can see that market made a big move here. And then we saw that gap down, right? So the gap downs, a lot of shorts are trying to short sell here, buy some puts. Thought that this is gonna continue lower, make it lower. Maybe they thought the crash was gonna come, whatever that reason might be. Well, the market did is it turned around, gapped up again, and kind of created back-to-back island reversals. Ever since then, it got up, pulled back, retest this gap area. Something I talked about last couple of weeks, that we wanna see buyers protecting these two gaps. We've been tracking gaps for months now, so these two gaps are still open. Well, the bears did open this gap, so in the minor term, the longer this gap stays open, things are going to be hectic for the minor term bulls here. So we'll see. If we gap right back up on Monday, there will be another island. I'm not sure if that's going to happen. If we kind of fizzle, come down, and then gap back up and fill that gap, once the gap gets filled, probably going to act as resistance. We might pull back. So from what I can see, we're probably going to hang around here for a little bit unless we see very fast gap up on Monday or Tuesday, gapping it up, making this into another island reversal. Or we call up and fill this gap, pull back, couple of days, hang around sideways, and then get up. So we'll follow up on that next week. But, overall structure is very bullish at this point. We have broken out of this base. We've been talking about this for months, that the Spider has been cultivating this base. We're no longer in a downtrend. We cannot categorize this as a bear market. What the market really did was we saw that swift move here, and basically the market digested this gain by consolidating, right, building a base. The longer the base, the better it is for the market, because you can see plenty of time to rest for the buyers. And we finally broken out of it. We could see some, some up and down movement here in the minor term, some turbulence. But that's just a minor term, something that I've been teaching you guys. Do not pay too much attention on a day-to-day basis. Just understand the overall structure and let the market sort things out. So we got the 20 MA here. That 20 MA did act as support back in August 2nd. So we got some minor term support in that vicinity. If we don't able to protect that or respect that, if the bears continue to come back down, we may retest this level. And then we got the support in that vicinity. So what the buyers want to do, buyers want to make sure these gaps are protected. At least one of those gaps are protected so that the buying pressure can continue to find momentum to the upside. So let's follow up next week and see how these levels played out. We'll go from there. Again, if I see anything, you can follow me on Twitter at 2KKim. And if we see like a gap or something like that, that could turn it into something like this we saw, where we saw gap down and gap up next day, kind of turn it into island reversal. That would be the best case scenario for the bulls. If the bulls want to see this thing, just don't even want to deal with this gap, don't want to like consolidate and have some turbulence next week or two, let's gap that up, make it into an island, and then let's get that momentum going. If the bulls cannot do that and we start to fizzle, start coming down, we got a 20 there, we got the 279, and we got the rising uptrend support, we got the 50 MA in that vicinity and the gap area. It should act as strong support in the minor term. Let's go to Russell 2000. Russell 2000, I've been tweeting, or I've tweeted out that, are we gonna see shenanigan or are we gonna be respected? I don't know. Nobody really does. Either way, we're going higher. Either way, we're going higher. I don't really care what you call this. You could call this, like a symmetrical triangle. You want to call it a pennant. You want to call it a flag. It doesn't matter. I don't know exactly where it's going to break out. You can say, well, my textbook said it has a 75% breaking out to the upside. I say it has a maybe 55% higher, 45% lower, but it really doesn't matter for somebody like me who position trading this, right? Only the short-term traders are going to be like, oh my God, it's going to break higher, it's going to break lower, right? I don't really care for that. Either way, if it breaks lower, well, just buy more because it's going to go right back up. If it breaks higher, do not chase it because it could come back down, stir people up before going higher. So either way, break higher, break lower, I believe we're going higher. Why? Because we're in a primary term uptrend. We saw good consolidation. Remember back in 2017 how ferociously I was buying the dips in 2017, and then we started making this new low here, just freaking everybody out. Got up there, right? That's what I'm saying. You think that, oops, where's my... That's what I'm saying. You see the consolidation. You can see whatever you want to call this. It doesn't matter if it break out to the upside or downside. It resolved to the upside. Obviously, nothing's guaranteed, guys. I'm talking in a sense of a probability, right? It is a probabilistic certainty, nothing guaranteed. So, and not only that, what happened was we saw a swift move there and we saw another consolidation. This time, though, we did break out to the upside. You can see that this thing actually broke out, actually very smoothly. There was no head fakes. There's nothing like. Sometimes the market gives you some swift market condition where it just breaks out perfectly, pull back to another consolidation. Maybe it will break out perfectly as well. So if you actually go back, look at this. Is that we got up, we consolidated. This one's a little bit more hectic, but we got up again. Consolidated. This one was actually more well-organized consolidation. We didn't see any head fakes, shenanigans, nothing. Just perfect triangle or a symmetrical triangle. And then we just broke out. We didn't see any kind of head fake. We didn't see any kind of up and down traps or nothing like that. And then we're currently forming another consolidation. These formations is how the market moves in a primary term uptrend. It goes up, it consolidates, it digests its gain. Sometimes it gives you some up and down shenanigans, head fakes, whatever it is, but then it usually resolves back up. A lot of times people look at things too closely and they start to freak out when this thing breaks to the downside. Once you start to, if you start to see this thing breaking to the downside, I would actually look for opportunity on the Russell 2000. One last one, XLF. I'll let you guys go with this. XLF, this is a funny part. This thing happens all the time in the market. This is what I call mine. You know, mine, like when you're in a battlefield, in a war, there are mines everywhere to trap soldiers, to kill soldiers walking around. Well, these mines right here to kill traders, right? They look at things too closely. You know what they say? They say, well, this is a level that bulls don't want to see breaking. I say you want to see these levels breaking, so it takes stops out, takes weak hands out, and then finally, only then, the market can move to the upside, resume back up. But sometimes, it doesn't happen all the time. Sometimes market perfectly respects some of the levels, but sometimes it gives you these traps here, okay? But again, it's a different story when you're seeing when the market is a downtrend, right? When the market is a downtrend, market has been in an uptrend, right? But let's say market has been in a downtrend, right? And then you see a trap. Well, that trap actually is gonna be just trap, not trap. That's actually, that low could possibly just commencement of another next leg lower before in a downtrend. But thing about it is, if we were not in a downtrend, you think they were a downtrend because you look at things too closely. Well, okay, this is a downtrend. No, it's not a downtrend. We have no, you know what I mean? This is more, if anything, more of a consolidation phase within an uptrend. Remember, got up, consolidated. Got up, consolidated, got up, consolidating. Do you guys remember when I was trading XLF? Do you guys remember same thing happened in XLF? Do you guys remember how many people were saying that banks are going to come down because of this head and shoulder formation? That this is going to come down to 20. How many people thought that, right? I was buying these dips, and I even thought that there could be where this could come down lower, freak everybody out before going back up. I even thought that that might be even possible. We didn't get that here. You didn't get that. Well, it came back here, and we got it here. See how savvy the market is, right? And anyway, so now we're building a base here. If anything, this looks like maybe like an inverted head and shoulders coming back up here. We got this gap still open, that downside gap. We open, bears open another downside gap. Things are starting to be, just, I mean, in the minor term, in the overall structure is good for the bulls. Overall structure is looking good. I think we are going to thrive. The banks are going to make new all-time high. But in the minor term, the gap is still open, was not able to fill that gap. We saw a gap down here. So we got two gaps open. Bulls really need to get up here, fill this gap and fill that gap and do some shenanigan and before getting back up here. So we technically have lower highs in the banks. So that actually makes it a little bit more weaker on the bank sector. But I mean, I've been buying these dips here, holding everything. What we want to see is possibly maybe pulling back a little bit, maybe some of these levels, and then get back up. Or we can just gap it up. They'll make into an island reversal. I don't know exactly how it's going to play out, but I think if we can able to hold some of these levels, in the minor term, I want to see 27, 28, 27-ish. Can hold these levels, these moving averages, and then get right back up. That could potentially be a right shoulder there, the inverted head and shoulder. Remember last time we saw something similar to that here. I mean, left shoulder, double heads, right shoulder, and we pull back another higher low, and then we got a pull back again, and then we cultivated another higher low. So that's kind of what we want to see here is that this thing coming back down, create a higher low, pull back, higher low, and then thrive. Let's see how that plays out. We'll follow up next week. We'll go from there. You guys have a wonderful weekend, and good luck trading next week.